Hello, Jim here. Today I want to talk about the option wheel and how it can work really well for small accounts. I'm going to share with you 3 or 4 stocks that are potentially a good fit for the option wheel at this time and how you could potentially make upwards of 1,500 on a monthly basis. I'm going to share with you also a little bit of details on what the trades would look like. One I actually made this past week. I also wanted to talk briefly about what's going on with the market. I'm not sure we're going to continue with this upward momentum. It has done the opposite of what I thought. I thought we would potentially have a correction or a bit of a downturn. So the higher we go, the risk goes up exponentially, so as we reach new highs, the potential of a correction and a significant correction also goes up. So I just want to remind people to stay safe out there. Don't do crazy trades. Don't do huge amounts of contracts or take really high deltas with your trades. Just kind of wanted to mention that. Also wanted to talk about the Fed and what's probably going to happen with unemployment looking better than what was expected and inflation potentially being a little bit higher than what the Fed thought we would get at this point. I'm not so sure they're going to do a big cut. I'm thinking probably a quarter point in November, or they may not do a cut at all. Me personally, I'd rather them not do a cut. I'd rather stay where we are and then, maybe look in December, see if anything changes. I think that the rates where they are currently are good for the economy. I don't think really low rates are that good. I also like the fact that we can earn some really good interest, like in Fidelity. I believe the rate is still 4.61. And, if they do another cut, it's going to get to a point where we're just not earning as much interest on the income that we do have kind of sitting in the sidelines. So just wanted to talk about that too. The next part of this video, I'll share with you these 3 or 4 stocks that I think are potentially not currently overpriced, and you can run the wheel on them and make some pretty good income. So stay tuned. I think you're really going to enjoy the next section. Okay, so what I've done is, if you've been watching my videos recently, I really like Square. If you look at Square, it's got some interesting numbers, and it's not overpriced. If anything, it's reasonably priced at $69.70. It's like a 19 not deltas, PE. If you look at its profitability, it doesn't have the potentially best profitability, but it's improving. If you look at earnings, it does have a significant increase in earnings, and it's growing quite well. And what I've been really surprised about is how much additional premium and volume that it has. So I actually did a trade on Friday, and I'm going to share that with you here. And I wanted to show if you had around a $25,000 account, you could potentially do 4 trades and pick different deltas for Square. The one I did is this one right here, and I did it on the 11th, which was Friday. So I sold the 65 expiring on 11/15, and it was a 29 delta, and I picked up $293. This is only 30 days out. So if it got assigned to me, my cost basis would be right around 62, a little bit higher than 62. We'll talk about call premium in a minute, but overall, it's like a 49% return on a cash secured put, which is really good. And this is the required capital, which is just the 6,500 minus the 293.32. And then the ROE or ROI is just this divided by this adjusted for the year. So again, for cash secured puts, that kind of a return is really good in my mind. Now, what I decided to do is I wanted to look, what if I decided, and I'm okay with owning 400 shares of Square, what could I potentially make? So I looked at different deltas. I went lower to a 25 delta, and then I went higher to a 37 delta, and then really near the money, it is 45 delta. It's currently, I believe, what did we see, 69.90, 69.70. And then I looked at each of the put premiums, and this is, for a $70 strike, you could bring in nearly $500, which is significant. For the 37 Delta, it was 388. So it's almost like $100 more in each case, or a little bit more than $100, except for the 24 Delta or 25 Delta, which is at 6250. So in a way, you would be spreading your risk. You would be, opening up positions at different strike prices. So most likely, if things got assigned, probably not everything would be assigned, but you're definitely taking more risk. So if you have a $25,000 account, you'd be kind of putting all your eggs in one basket. And I do have another section I'm going to talk about a little bit below where you could do 4 different securities and potentially do almost as well. So for this, the total income, which is just this put premium added together, and then the interest, again, I'm earning right around 4.6% on a yearly basis. I would literally be bringing in just shy of $1,500 on a monthly basis, which is nearly $18,000 yearly, which is almost like a 72% return. So you can imagine if you can get a 72% return within 2 years, you more than doubled your $25,000 account. Now, some interesting things that I learned along the way. So these are actual numbers. This is from Friday on the option chain. I pulled all these deltas, and I've also pulled the call premium. But the weeklies were not as good for Square. I found that the monthlies, if I added, what I typically do is I add each week, and then, I try to see, well, if I did weeklies, would it be more? But I found, and this is very unusual, that Square, actually, the monthlies paid more. So, and that's what I prefer to do. Typically, if a weekly isn't significantly more, and it typically isn't, it might be 30% more, then I prefer the monthly, mainly because I'm a passive investor, trader, and I don't have lots of time. So I like to make fewer trades, not more trades, and do fewer contracts. Also, to protect me, if I was doing these 4 contracts, I could also buy some puts for downward protection. I found that the 35 Delta or the $50 puts were 35 cents. So that it wasn't that expensive. I could buy 4 puts that protect me right at $50 if I wanted to, or spend a little bit more and do like 55 or 60. So that's something to keep in mind. And I could go with lower delta for less risk. So I could even go lower. Like I could start not at the 70, but the 67.50 and take less risk, meaning kind of moving this chain up and down depending on how much risk you want to take. And then not all would be assigned. So again, if with these 4 contracts, if the market dropped, it may be, well, the top 2 might get assigned. It would have to drop below 65 for all 4, or 62.50 for all 4 contracts. Most likely you'd have maybe the 70 would get assigned and potentially the 67.50. And then those you could roll, meaning you could then sell a covered call, not really roll, but you could then, once you own those shares, meaning the shares would be assigned to you, and you'd have 200 shares. The cost basis would be, somewhere between 64, usually probably pretty close to $64 when you average these out with the premium. And what's really impressive is the covered call premium is even better. So selling covered calls at the 67.50, meaning my cost basis is 65. If I sold a covered call, I would bring in nearly $510, or right around $510, and then combined, that's almost $900. So it's significant amount of covered call premium, and the 70 is a little bit low, but it's still, when you look at the put premium you brought in, again, you're talking around $900. So around $9 of this $70 put. And then required capital is based on the strike times 100 minus put premium. That's how I'm coming up with this required capital. So this is something, you could potentially do. And again, you're putting all your eggs in one basket. But, say you have a $100,000 account and you really like Square. I use Square. I use it for my son's business. I've also used it for estate sales and different things. I really like the company. And I like some of their product offerings for small business where you can pretty much house your whole business on it. Now, if you didn't want to take all that risk, you could mix it up with different companies. You could first, for this one, I'm doing the first call strike. If I run a call, meaning the shares are assigned and I decide to run the call, it's going to be the first strike out of the money. So just keep that in mind. And also the puts will be very near the money for each one of these. So some of these companies I like are Chewy. Let's look at Chewy real quick. And I also don't believe it's way overpriced either. I think it's a bit overpriced. I'd rather own it around 25 or, be closer to 25. But it's got a 22 PE. If you look at something like Palantir, I think Palantir has like 120, 130 PE. And some companies have 60 and 70 PE. So for a software company, it's not way overpriced. It has pretty good earnings. If you look at the earnings, they're going up pretty significantly. And they've beaten earnings by a lot too, as you can see here. Growth, they're doing quite well. And in profitability, again, just like Square, their return on common equity is fantastic. So they're definitely doing pretty well. Where they're missing out is gross profit margin and a few of the different pieces. So good, but not great profitability. But I do like that ROE and I like the return on assets. So overall, they also don't have much debt. So a good company. And again, when I looked at this, I looked at the 2750, which is a 45 delta. So I am taking a little bit more risk, but I'm picking up over $100 in premium. And then my capital required is 2644. And this is like a 42% return. So their premium is good, but not great compared to Square. Square's kind of unique. I've been kind of surprised how good the premium is. So here, again, if you're going to do 4 different stocks, I think Square should be one of them. And this is, like I said, this is 2 trades. So instead of you would have 5 contracts. But in this case for Square, I would do 2 because, again, of such good premium. So with this, you'd be bringing in $1,006 again for 2 contracts. So it would be right around 60 would be your cost basis. And then, here's the required capital. Return on investment would be 87%. So it would be even better. And part of that is because, again, I'm taking more risk. As you take more risk, your returns can go up quite a bit. But again, you are taking more risk. But keep in mind that none of these companies that I'm sharing with you here, I don't think are way overpriced. And then if you can get, this kind of premium, you're really picking it up for closer to $60, $61, something like that. Now, the next one is TWLO, and I currently have one position, a cash secured put. I'm looking at doing another one. So this is probably a trade I'll do this week. Again, expiring on 11/15. Let's look at TWLO. Then we can look at the summary, and it's got a 20 PE. It's bringing in pretty good income. You see, it's gone up quite a bit. So I don't think it's crazy priced. I do think it's a little bit pricey. I'd rather see it come down a little bit, but if we get a correction, that'll probably happen. Earnings, you can see they're doing pretty well. They're beating earnings. Again, another good company that's performing well. I don't think they pay dividends. No, growth is good. Again, another A for growth, just like the previous company. They also have really good ratings, both with Wall Street, Quant, and SA analysts. Profitability could be better, but not bad. Return on equity is a little lower than I'll typically like to see. It's also negative, which is probably related to really high retained earnings. But the TWLO that I currently own, I've traded it quite a bit. It's been very, very profitable. And I would like to own 200 shares of it. I think I own some Square already. And a lot of these I'm okay with owning closer to 400 shares. So let's go back into that spreadsheet. So here, cash secured put 65. And it's nice too that it's so close to, the strikes are so close to what's going on with Square. But here again, you can see this is one contract, 190, still not as good as Square. And this is more like a 31% return. But again, the goal is to have a number of different stocks, not just one stock. You never know what could go wrong with a particular company. So that's why this, in some ways, is less risky than doing just Square, even though the premium is so good. So next is Pins. This is Pinterest. And I've looked at them a long time, and they're now making some pretty good income. So again, PE is not crazy through the roof. They're not near their 52-week high. Their earnings, just like some of the others, look pretty good. Plus they've beaten earnings, I think, all year. Profitability, B plus. They have pretty good return on common equity. They have leveraged FCF margin. Gross profit looks really good. So they're making some pretty good money. And in growth, their growth looks good. They're growing nicely. So again, another company. This is more of a social media company. But again, another, and it's also less expensive at 34. So if we go back to the spreadsheet again at 34, we were going to do again a 45, the closest strike to the actual price, and that's 32. And this one is bringing in 170. So it's half the price of TWLO and Square. So it's got some pretty good premium. I could have potentially done more contracts with this, so maybe I could have done two, 1, and 3 or something in the sense of the pricing for Pinterest. And then again, it's got a pretty good return. Cost basis will be right around 30, which again, if you look at Pinterest, 30 isn't, if that's at a good spot, and that would put it probably pretty close to a 20 PE. And then all these added together, again, pretty close to $1,500. And these would be, I'm planning to make some of these trades within my Fidelity account. So again, I'm calculating the interest for this, which the interest would probably be lower, especially if I got assigned. But again, actually, this is a little higher than 1,500, 1,568, and your total capital is only 24. You're shy of 24,000, and in the yearly income, this is very similar to what we were looking at with Square, but it's different companies. Now, again, weeklies were not good for all but Chewy. So I looked at weeklies, and it may be because the market was up so much on Friday. So I might need, if you decide to make these kind of trades, of course, always do your own, research and be sure these fit with you. This video is for entertainment. So if you do decide to make one of these trades, dig deeper, especially if the numbers were kind of skewed on Friday because of the market being up. The market was way up, especially certain securities. This is the nearest to the money for both puts and calls, and they stay above the cost basis for calls, and not all would be assigned. So can do the 5 contracts, once assigned, run call, and then repeat. Now, the call premium for these were typically better than the put premium, and especially so for TWLO. I've also seen this for PayPal. I own some PayPal, and I own some Shopify. I've seen the same thing with Shopify, some really good call premium. So I would do even a bit better if they did get assigned, and then I was able to run make this kind of income, for Pins 230 and this was taken again from the November 15th option chain. So, the numbers potentially could even be better. And, what's important about this too is the fact that so many of these stocks are not way overpriced. So again, this is what I wanted to share with you guys and how it can work out really well. If you disagree or you have a stock or something that you think also would be a really good candidate, please leave a comment. If you want to learn about my memberships, they're growing. I have a lot of people sharing their trades now within my Discord. I have people doing futures. I have people doing 0 DTEs. I have people who are definitely probably better traders than I am. Again, I'm I'm trying to set up an environment where people feel safe. I also don't require you to kind of make a phone call with me. You can sign up. You can actually get into the Discord. If you do the least expensive, which is just Patreon, is my investor club tier. You could try it for a week. I have a lot of people do that, and almost everyone ends up joining. So just wanted to share that with you guys. I hope you're having a wonderful weekend, and thanks for taking the time to watch the video.